When you pay companies such as Facebook or Google to promote a product online, the money you pay is received in a country outside Uganda's jurisdiction to tax. This means, for instance, if Facebook makes $1 million from advertising in Uganda, Uganda Revenue Authority is unable to tax that income since the company is not physically located here. In June 2021, finance ministers of the rich countries of the G7 reached a deal that will impact the global tax framework for multinationals.
Different modalities out there.
As part of the deal, a global minimum corporate tax rate of 15% was agreed on multinationals with more than $890 million in revenue, with the exceptions of financial companies and extractives such as oil companies.
We know that Uganda is not part of the inclusive framework, but we need to get ready ideally. And what we've learned today is it's better to sign, it's better to have a no deal than a bad deal.
We need to look at it in detail and ask ourselves, does this deal give the taxing rights to Uganda? Where this 15% is a good percentage of, for tax, for corporate tax, who gets to benefit from it? Is it the country where the company is originating from, or the country where the company is doing business?
Part of the reforms aim to prevent countries competing to offer the lowest tax rates, attract investment, which has often resulted in multinationals paying laughable levels of tax. Civil society organizations say the deal was not inclusive, as views from low-developed countries such as Uganda were not sought.
The current design of our system is that for us to be able to tax you, you must come and set up shop in Uganda, such that as a tax collector, I have to come to your office, register you, and be able to send you a return. You fill it, and at the end of the period, if you don't pay, I should be able to enforce. But you know that these multinationals which do business online, they don't have physical presence. They don't have an office in Uganda. So what this bill is trying to do is they are trying to create what we call a digital office, such that we are able to tax a proportion of their profits.
We need more research, we need more understanding of these dynamics on how do we tax companies that are abroad. If we lower 15%, should we now remove all exemptions? So now that we have considered 15%, therefore no companies will come here and ask for tax exemption. The bottom line is, what does this mean for Uganda in terms of tax revenues? But also there was an aspect of what does this mean in terms of labor.
There is growing concern from tax experts that the local firms are choosing to domicile their investments tax havens such as the Netherlands to benefit from low tax regime, a situation that has further stifled efforts to grow the domestic resource envelope. Story by Ali Twaha and Rachel Nachwala for the news.